For centuries, gold has been an ultimate king of assets, a silent protector of wealth sitting in the bank vaults. But as we move in 2026, a new king is emerging. One that doesn't just sit in the vault, but actually powers the future. Analysts are called it the new gold. It called copper. We just currently witnessing the historic shift. While gold is a hedge against the system failing, copper is a bit on system evolving. From the massive data centers powering artificial intelligence to the global shift towards green energy, copper is irreplaceable heartbeat for the modern world. Today, we are breaking down the data, why supply are vanishing, why demand are exploding, and exactly how you can position your portfolio for the gold super cycle. Let's talk about biggest driver of 2026, artificial intelligence. Everyone talk about the clip of NVIDIA GPUs, but nobody talks about how you power them. An AI data center isn't just a building, it's a copper and silicon monster. AI servers require significantly higher power density than traditional ones. This means thicker cables, massive burbage, and complex heat exchange systems, all of which requires high-grade copper. Current estimates suggest that data centers alone could demand an additional 2 million tons of copper by 2030. A single hypercell data center can consume up to 50,000 tons of copper. To put that in perspective, that's enough copper to manufacture nearly about 6 lakh electric vehicles. As we build a brain of future, we are using the nervous system of the past, that is copper. Here is the professional secret. We are handling into a massive supply deficit. The lead time, it takes an average of 12 to 15 years to bring a new copper mine from discovery to production. You can't just flip a switch and get more. Declining ore grades, the world's biggest mine, in Chile and Peru, are getting old. We are digging deeper and finding less copper per ton of rock. The green transition. An electric vehicle uses 3x more copper than the petrol car. Offshore wind farms use 5x more copper per megawatt than the coal plants. By 2030, the projected supply gap is 10 million metric ton. That is roughly 25% of global demand that simply doesn't exist yet. When demand is infinite and supply is finite, prices don't just walk, they skyrocket. So how do you actually invest in this? You can't exactly keep a ton of copper under your bed. Here are the 3 professional routes. Route 1. In India, companies like Hindustan Copper and Vedanta provides direct exposure. When the copper prices rise, these companies' profits explode. Round 2. ETFs and funds. If you want to avoid the risk of single company, look at the copper ETFs like CPER or Global X Copper Miners ETF, COPX. These track the metal and basket of mining companies. Route 3. MCX futures. This is the high risk, high reward, but it is the most direct way to play the price movement. Disclaimer: any consultant with your financial advisor must necessary. Commodities are volatile, and timing is everything. Gold will always have its place as a store of value, but if you want to invest in the movement of the world, the electrification, the automation, and the intelligence of the next 20 years, you have to look at copper. The world is moving from a fuel-intensive economy to the mineral-intensive economy. In this new world, copper isn't just the industrial metal. It is the new frontier. It is the future of gold. What's your take? Are you holding gold or are you betting on the red metal? Let me know in the comments. Don't forget to like and subscribe for more deep end drives